Who gets rich during a recession? The recessions are tough on the economy. Investment activity slows, credit is less accessible, and well-paying jobs just become scarcer. However, recessions also tend to be when savvy people become wealthier. So the bottom line question here for today is, who are the winners during a recession and why? Well, the first group are people who seek value. When recessions hit, assets become less expensive and bargains are more plentiful. There's something in basketball we call the hot hand fallacy. Basketball fans typically believe that someone who has made several shots in a row will keep making those shots. And the same applies to business. If real estate or stock prices increase for several years in a row, people think that it'll continue indefinitely. However, the past does not guarantee the future, and it isn't always smart to buy assets when the market is hot. Some of the best investments are made when the market is actually down. And the key, though, is to focus on value, not just price. Price, remember, is dynamic, but value is constant. The second group of people who will thrive in a recession are people who offer value. By the same notion, if your business offers value, people will seek you out. I remember reading when Apple launched the iPod in 2002. It was right after 9/11 and the dot-com crash. Apple offered a cheaper alternative to buying CDs or even attending a live concert. It helped propel Apple into the behemoth that it is today. Service businesses can do the same. Companies, even small ones, that provide great service at a fair price and treat their customers like gold will thrive in a recession. Third group is people who use data while others are just following the crowd. And most people just don't think for themselves. They do what is popular and what others are doing, which is why I don't like cryptocurrencies. And I don't want to keep beating on this, but they're purely speculative. There's no quantifiable way to determine value, but there's a lot of hype around them. And even smart people get lured in by the hype. See FTX. Value investors find value by understanding and analyzing data. Remember that. Fourth group is people who remain calm when others are panicking. Is now, you might be asking yourself, the right time to start a business? Most people just don't have the confidence to follow their instincts when the market is soft. People who thrive during a recession are calm and composed. They follow the data and their instincts, and they're not influenced by hype or panic. They have the capacity to think clearly when others just have their judgment clouded by emotion. Finally, people who think long-term. Warren Buffett was once asked if his investment philosophy is so simple, why doesn't everyone do it? And Buffett responded by saying, because nobody wants to get rich slow. During a recession, asset valuations are usually volatile in the short run. But those that can think long-term will see opportunities when others only see risk. I like to say a crisis is a terrible thing to waste. And although I don't think we're in a full crisis right now, we are heading more than likely towards a recession. And I think it's going to take 12 to 18 months for things to settle down. Most people just don't have the stomach to deal with the rocky road ahead. But those that can provide value, remain patient, and make decisions based on data and for the long-term objectives, they will thrive during the coming recession. Well, after 10 years of an unprecedented bull market in real estate and in the stock market, we're starting to see what was inevitable, and that is a correction in the market, both in real estate and in the stock market. And the fact that we've had such a long run will probably mean that the recession won't be insignificant. It's hard to tell, really, whether it'll be long or short or deep or shallow, but my guess is it's probably going to be a little bit tougher than most people are anticipating right now. So if you were smart, you set some money aside, you're liquid, you're in a position to expand market share carefully and without taking on more long-term fixed expenses. You might be able to continue to expand your accumulation of assets over the next couple of years. I think there'll be some bargains out there. You might want to look a little bit outside of the box. And I encourage everybody to put together a financial plan for next year, but think about a couple of different contingencies. I know for my business, the NARA business, I've put together a budget for next year that is anticipating some, I think, tightness in terms of revenue, put it lightly. But I also put together what I call a draconian budget that I just keep to myself. And it's one where if things really go to shit, what would I do? And how would we, make it through to the other side? It's an important process to go through. It's not fun, but when you're done, you're kind of glad that you did it. So I think that putting together a budget, financial plan, even an investment plan, goals for your business, you should probably have a couple of different versions of that, depending on what the market actually does. You'll be ready. So good luck. Appreciate you listening.